It's really important to have a discipline. It's going to make the biggest difference in the world having a sell discipline. There's no reason to have a stock go from 3 to 100 back to 3. I guess that AMC thing. Certainly, if it makes a 10 to 20% move, I'm going to take a third off the table, move my stops up. And one of the biggest things that have happened, some of the best trades I've had, or some of the best months I've had, is what they call keeping runners. Keeping a run. What does that mean? Remember, look, we're trying to keep our losses short and keep our runners going, right? And most investors do what? They kind of cut their profits really quickly and stay with the losers. Average in, average in. It's not a good thing. So here's how you do it. You buy 100 shares. It goes up 2, 3, 4, 5%. You have to set that, and we'll talk about those disciplines. Then you add another scoop. Now you're fully positioned-ish, okay? Now you have a stop loss below. Market goes higher. You can add it. Some of the tools like a TD, Think or Swim, some of the ones at Schwab, you can put what we call a trail stop. So you buy a stock at 100, you put a trail stop of 5 points. As the stock goes higher, let's hope, eventually get stopped out if you can't watch it every day. So, but the real difference though is not necessarily the stocks you own. I know that sounds weird, but it's what you do with those stocks. So if we get a good move up, sell a third incrementally, pull your stops to break even, market moves higher, that stock moves higher, another third, and you want to keep your runners. Think about that little, you look a little icon on here of a runner. See a guy running long. It'd be nice to have like 20% of your runner, which is already paid for because you've already made some money. And now you can make that stop loss a lot looser, give it some room to breathe. The example is last summer 21, excuse me, AMD, Tesla, NVIDIA, complete runners. I mean, you bought it on a breakout. Again, it's going sideways. It broke out in great volume and never looked back. You added to that position, adding to winners, remember, not adding to losers. NVIDIA, AMD, again, this is all rearview mirror stuff. Tesla all broke out. And eventually you did some selling into that, raise your stop loss order, and now you're left with any amount of shares, which is your runner. You know what? It was so nice to wake up every morning with those shares almost paid for and seeing those runners gain 6 points, 8 points, 10 points. That's what you want. Not easy to do. And by the way, a lot of times in a choppy market, you'll notice you'll get stopped out. You get stopped out very frequently. Kind of tells you, ooh, you step back a little bit.